It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me, the smartest guy in the room, Michael Becker.
Hey, Paul.
Now, Michael, you have 48? I've stopped counting. How many? 4,800 units?
We've done just shy of 4,800 units.
They need to start calling you Mayor Michael Becker, the mayor of Beckertown.
Yeah, that's right.
Unbelievable. So you're doing a great job with that. Question that a listener had and wanted to kind of get our opinion, get Mike's opinion on is, what does Mike build into his underwriting for the potential rise in cap rates when he sells, considering we're at the historic lows in interest rates and cap rates? Mike?
Yeah, so that's an easy softball you threw at me, right? How do you predict the future when you sell? And we certainly have been on a good run, as I've like to say. I've been saying this for a while. It's kind of the golden age of apartment ownership has really been the last 5, 6, 7 years. Has really been phenomenal. Along the way, we've seen quite a bit of obviously strong fundamentals. Vacancy is near historic lows. Your cap rates have compressed, so cap rates have gone down, and rental rates keep going up. So how do you underwrite deals now, looking forward 4 or 5 years on potential exit, especially if interest rates, which have gone up just a little bit, if they continue to go up, that generally speaking, interest rates and cap rates are somewhat correlated. So as interest rates go up, the cap rate should go up as well. So that's kind of, I think, the heart of what the question is. So I think some of the things that we think about, making sure that when we're underwriting these deals, we don't use the most recent year or two worth of rental rate growth. Typically, we try to go a little bit more longer term on historic growth. So, maybe not even grow the rental rates, just kind of try to take whatever the current in-place rents are, take them to market. We usually try to take that over the first 2 or 3 years. Then year 4 and 5, we'll kind of grow rental rate and expenses 2% each. Typically, it's typically how we underwrite. So we're not, even though if you owned an apartment in North Dallas, like we own 1,100 units in North Dallas, the historic rental rate growth for the last 2 or 3 years have been closer to like 7 or 8% on those properties as what the market rates have gone up. But that certainly can't be sustainable in any long-term environment. So we'll underwrite closer to, like I said, 2% after we burn off the loss of lease over the first 2 years. So that's one thing. The other thing that we underwrite is kind of cap rates. I mean, that's certainly a crystal ball, what's going to happen to cap rates. I think if you do something along these lines, so if you have, say, a 5-year hold period, and you want to grow cap rates maybe 10 or 15 basis points a year over your hold period. So say you grow at 10 basis points, you're buying a property on a 6 cap. So the market cap for a B product, call it 6, which would probably be a little high today in actual reality, but it's called a 6. And then you want to sell it in 5 years. Maybe you use a reversion cap rate of closer to, say, 6.5, so 10 basis points a year. If you have a 10-year hold, maybe you make that closer to 7. That would probably be a pretty conservative way of underwriting it. Kind of the longer you own it, the more exposure you have to the cap rates, the harder it is to predict. So maybe a little more conservative. If you have a 5-year hold, maybe expand at 50 basis points. That might be something to do. So those are some ideas. I don't know if there's any real wrong or right way of doing it, and everything's location by location. But those are some of the things we think about when we're putting together our pro formas.
And one of the things I wanted to just maybe mention too is that if you're buying a property and the seller has done a great job on the property, and they focused all their efforts, and maybe they have a 5% vacancy on the property, or 3% or 2%, whatever a lower number is, but the market in and around that submarket is 11 or 12% vacant, we're not going to use that 5% vacancy on the property. We're going to use the 11 or 12% vacancy in that marketplace and compare that to the subject property. So that's an important point to know, is that even though that seller's done a great job, we're going to be more reflective when we underwrite the deal to the market rate, not the individual property.
And make sure that you guys underwrite some sort of economic vacancy as well. It's not just the physical vacancy, there's actual collection loss. So I don't know if you want to expand upon economic vacancy, Paul. That's something we haven't talked about in a while.
Well, there's 2 types of vacancy: physical vacancy and there's economic vacancy. Physical vacancy is the people that are actually in the beds of the property, and the economic vacancy is the people who are in the beds who are actually paying rent to stay in those beds. So a lot of people may live there, but a lot of people that live there don't pay rent. So we have to do kind of a calculation that way. And the one we really pay attention to is really economic vacancy and how that property is doing. It's good to have the property filled up, but it's most important to have those people actually pay when they're going to live at your apartment building.
It's a very, very key distinction. Like Paul says, it's easy to fill them up. It's not so easy to collect the money.
That's right. So Mayor Becker, if somebody wanted to say work with your group and kind of build a relationship and kind of find out a little bit more about what you guys do when you invest in apartments, what's the easiest way for somebody to get to know you?
The best way is just go to our website, which is my company, SPI Advisory. So it's www.spiadvisory.com. That's SPI like spy advisory.com. And on there's a contact page. So just click on that and put in your name and phone number, and some of my team will reach out and give you some more information about our team and potentially even set up a quick call with me and kind of go over what we do and kind of explain that to you that way. That's the easiest way to reach out to us.
Fantastic. And don't forget, coming up in October, the Old Capital Conference on B&C properties. Get a chance to meet with all the movers and shakers in the B&C multifamily world here in Dallas, Fort Worth, and some areas of Texas. I mean, a great conference. We bring everybody together, and you can kind of talk and find out a little bit more about what's going on. If you're thinking about investing in multifamily properties, and I think it's going to be a good conference to go to.
Yeah, a bunch of panels, right? So I think I'm going to moderate one of them. What am I moderating? The broker panel, is that right?
I think so.
Yeah, we have 4 or 5 panels and I guess speakers, so it should be good. If they want to know more information about how do they find out about the conference?
Best idea is to go to the Old Capital Podcast. There's a click button on that website. Make sure you click it and sign up for that podcast.
So that's oldcapitalpodcast.com. And then on there's information about the conference, as well as we always talk about the Multifamily Finance 101, kind of the white paper that is kind of the basic blocking and tackling of apartment financing, as well as the sample due diligence checklist. So what I attach when we submit LOIs for offers. So it's all like the diligence and information that we request when we're buying properties.
That sounds good. Great information from Mayor Michael Becker, Mayor of Beckerville. So thanks very much. Thanks for listening to the Ask Mike Mondays. I'm Paul Peebles. That was Michael Becker. Thank you.